What's up? Welcome to the video. So I really want to put this video together because I've been in the markets 5-6 years now. I have that experience. There's certain things looking back that I did really well. There's certain things that I look back and be maybe more aware of. So it's important to actually look back on that, pay that forward. I know due to the recession and due to the last year and a half, 2 years of C19 and stuff like that, there's a lot of people coming into the markets now. So what I want to do is just pay that forward and really give you the right foundation in terms of things to gravitate towards, things to really be aware of, and some of the things I've learned along the way. So it's going to be really important. Trading itself has a very negative connotation. Every person you speak to in the gym or on the streets seems to have a perception of it. It seems to be a very toxic space where if you say to someone, I'm a trader, or I'm in Forex, naturally they're going to see in their mind cash that they've seen on Instagram. They're going to associate with you with having a lot of money, being very attracted to money, having cars, having watches, having all these kind of things. And they may even think it's a scam or it's a gamble or this kind of stuff. These connotations can be dangerous for someone coming in because you're obviously looking at that and you're like, well, should I even get involved in that? If it's a toxic space like that, if it's a scam, all these questions are obviously involved. Typical example, in the gym, so my girlfriend was speaking to someone and naturally was talking about me, so what I was doing, and the very first thing she said after she said I'm a trader was, her perception was, he must have a lot of money then. Now that's what first came to mind when she said that, the word trader. So I thought it was very interesting, and I think that's the perception that a lot of people hold. So just be aware of that when you're coming in. So one of the things that I will say is, in terms of education is one of the, if not the most important thing to actually just be aware of and have the right education coming into trading itself. Education, who do you learn from? There's so many people that have courses these days. Every person seems to have a course. When I first came into trading in 2016, there was literally a few courses to actually choose from. There wasn't 25, 50, 100 different courses. There's so many courses nowadays. Everything's so saturated. So who do you really learn from? So a few things to look out for is, number one, are they flashy? For me personally, if they're flashing cash and really just associating that lifestyle of materialistic things, flashy in supercars, Ferraris, watches, all this kind of stuff, if they're doing that 24/7, then it's a bit of a red flag. Don't get me wrong, if they're doing it every now and then and that's something they genuinely love, fair enough. But if they're really forcing it in your face and really marketing it heavy, then you've really got to ask the questions of why are they actually doing that in the first place. Do they have more intention of getting you to join their group than they do of actually doing well in the markets? So you have to kind of weigh that up both sides. And because you are new to the trading industry, you may not have that self-awareness yet of what's right and what's wrong. So just something to be aware of. So what I would look for is someone who is maybe a little bit more subtle. Maybe they could promote materialistic things, but they're not doing it heavy. It's fair, if they've achieved something, fair play to them. If they're doing it every once in a while, but not someone who's flashing it in your face. So look for someone who is a bit more subtle, who genuinely seems like they have a good character, who cares about you actually learning, and someone who has something within a group or a course that is going to aid your progression as a trader. The right fundamentals in place, such as psychology. Whether people want to realize it or not, psychology is a big aspect of trading, arguably 90% of trading. So many people overlook psychology. It's such a big aspect. So if they don't cover psychology, then it's obviously you want to look for other areas that you can learn that as well, because the inner work of trading is super important. But psychology, obviously the technical game, but the technicals aren't everything. People need to understand that everyone's looking for the new. There's always going to be something. I think it's very interesting in smart money as well, how you could have someone who has a 5-minute entry. Someone's always going to create a group and try and up that and try and one up that and be like, right, 3-minute entry, 1-minute entry, now there's a 15-second entry, 5-second entry. There's always going to be something new brought to the table. So it is a bit of a competition these days. So you just have to be aware of that as well. Also something to do as well, they're going to have reviews on Trustpilot or reviews on a certain website. Look at the reviews and speak to some of the members. If you can actually find some of them, a lot of these courses now or groups have students or members on Instagram, or people who are documenting their journey, just like I did back in the day, and really just speak to them, see how they feel about it. What have they learned so far? Is it good? Is it not so great? Like, they probably wouldn't be in it if it wasn't so good anyway. And just have a talk to them, see how they feel, and kind of judge it off that as well. And then maybe try it out and then go from there. So that's what I would recommend. Just be a good judge of character on what things are they actually promoting, and do they seem like good people at heart. That's the most important thing. So once you've actually started learning the foundations of trading and how to trade, and certain things of how to look for trades, and just the fundamentals of the market and your psychology as well, at some point, whether that's 6 months down the line, 12, 3, depends when you're ready, you're going to want to acquire some data via backtesting. So what this involves is basically going through historical data and seeing how your strategy would play out over the course of a period of time. It could be a year, 2 years, 3 years. I'd recommend maybe 3 to 5 years, based on what I've done in the past, to kind of prove profitability, prove you have an edge in the market. And that's what basically backtesting is. It's proving that your strategy works, proving that you have an edge longer term in the markets, and then going from there. Also as well, it not only improves confidence, so when you see these patterns playing out over and over and over again, and you see maybe, there's always going to be a sequence of wins to losses because it's a probability model, but when you gain the confidence of seeing how it plays out over the course of a sequence of trades, let's say it's 100 trades, 50 trades, 200, you're going to see that model play out, and that's a very confident feeling to see it play out. So that's important. What you're also going to have is cognitive recognition as well, because you're going to see the same patterns, the same setups, the same model playing out time and time and time again. And with that, if you're constantly practicing something, it's going to become ingrained in your subconscious mind. It takes time, it takes effort, it takes a certain amount of hours for it to really do that. And there's a few things I recommend to actually aid in that process as well, which we can do in another video. But repetition is what it takes. Practice is what it takes. With whatever skill you're learning, regardless of whether it's in the markets or not, repetition is key. Repetition is king. So something to bear in mind. The downside to backtesting is that it gives people a false belief that they're consistent before they actually are. This is a trap that I think I fell into, and a lot of people do fall into, is you gain too much confidence from backtesting and you base your strategy off of backtesting results. What you have to do is basically lay a foundation with backtesting, have it aid your confidence in the markets, let it prove profitability of that strategy, but then understand fundamentally live trade is completely different. In backtesting, you do not have the emotion of trading live funds. You do not have anything at risk on the table when you're taking trades, therefore you're naturally in a calmer, more flow-like state. Now, as you get more experienced, it's going to be very easier to tap into that state, but when you're new and you're risking live capital, your emotions are going to be all over the place. Your emotions are going to be very fearful, very greedy. You're going to naturally gravitate towards, when you're making more and more and more wins, you're going to want to make more and more and more, be very greedy. And then when you are taking losses, you're not going to understand the probability model, and you may start to get scared of taking any more trades. So there's psychological issues there as well. But it's important to realize that backtesting results are completely different to live trading. So what you want to do, and I'm going to talk about this in a minute as well, is really try and emulate a live trading environment when you're backtesting, and that's the best way possible to really generate that accuracy in backtesting of this is how it's going to feel trading live capital. And it's not going to be exactly the same, but the goal is to make it as close as humanly possible. So let's hop on the charts. I want to show you something. As we talked about before, the one problem that I really see with backtesting is that it doesn't emulate that live trading performance, because you don't have the emotion there. You can't track, the data as much, and you don't get that physical live market environment of actually placing trades. Yes, you can put a risk reward tool on. Yes, you can see it play out, but you don't get the ability to actually place trades manually, set the stop loss, set the entry, set the TP, take partials, all that kind of stuff you would do in a live market environment. You don't really get to do that within backtesting. However, I have a solution. So this video is sponsored by Forex Tester 5, so grateful for those guys for sponsoring the video. This is the platform that I came across around about 6 months ago, and before that I was trading using TradingView. But the downside to TradingView is that you can only backtest, let's say,
a month or two prior on some of the lower time frames, such as the 1, 2, 3, 4 minute. So anything past 3 months prior to the current date, I was struggling to backtest. I couldn't actually access that data, even on the highest subscription possible, which was premium. So then this actually came along. So this was the solution to the problem. So the great thing about this is that not only can I access historical data, so if I wanted to, I can go back to 2018, 2015, 2010, 2005 on the 2 minute time frame, and I can see the entries, I can gather the data, and on multiple pairs I can actually have that data, which is so valuable because I've never actually had that before. So that's number one. And the second thing is that I can actually place trades live as if I was in a market environment. So I'll just show you. So what I've basically done is just marked out this trade quickly of what I'll be looking at in a live market environment, and I'm going to take this trade. So we'll see if we get triggered in. So I'm just going to drop to the 5 minute. I've got entry criteria met, so I'm going to play this forward just a little bit. Right, I'm going to place the entry. So what I'm going to do is go over to the order tab, place a pending order, so we're going to do a buy limit. I'm going to calculate the risk at 1%, so 1% risk at price. So you can either do this manually, or I can just do this here like so, and then I'm going to place a stop loss just below as well, just to give it a bit of room. I know a lot of people can probably get tight up stops. I'm not too fussed about being too aggressive. I'd rather actually be in the trade. That's how I trade. TP, going to set TP as well. I'm going to go over to the 15 minute time frame, so I'm just going to roughly place it here for now and then change it, place the order. Perfect. Let's go to the 15 minute. Now when I'm trading with the trend, when I'm trading pro trend, I will target the swing high or the swing low depending on the bullish or bearish environment. So in the bullish environment, I'll target the swing high, and if we start playing this trade out now to see if we do get triggered in. Right, so we're triggered in, we've been executed into the buy position. We can see that live now down here. So we can see pound dollar buy, the amount of lots, open time, open price, stop loss, TP, everything you would have on MT4 is pretty much a profit, current profit and loss running. Now what I'm going to do is just play this out as a typical example, but you can already see the benefit of this. I've got a live execution as much as I can, as simulated as possible in a live market environment. I'm just going to play this out as much as I can. So this is just the 5 minute time frame, safe stop just below. Play this out. And you can see this playing out. Normally I would take a partial, but for this example I'm just going to leave it at B. I'm just targeting liquidity above this high. So I'm just going to play this forward a little bit more. Boom, out the trade. You can see now this data has changed. So if we look to the left, what we have seen is that we've got all this data. So we've got time, obviously days processed, months processed of how many months data I've gone through. Then we've got all this trade data, such as total trades, how many profit, how many loss, consecutive wins, consecutive losses, trades per day, trades per month, profit trades per month, all this data following. Then we've got income, net profit, gross loss, profit factor, max drawdown, that's helpful as well. That's in monetary amounts. And then we've also got this as well. So it's super valuable to actually have this data, because usually even if you have this data, it's from an external source and it's not as accurate, because obviously you're not placing the trades as if you would have placed this live, unless the spreadsheet is very technical. Now, the good thing about that, I've placed the trade, got the data, I can take screenshots as well on this platform, so it's super handy, and I can do everything I need with this platform. It's basically like MT4, just a more effective and more optimized version for backtesting. So really like this platform. If you do want to check it out, and I highly recommend to do so, there's a link in the description. You can have 10% off any product on the website when you use the code, and I'd highly recommend checking that out. So if you do want to, link in the description, and let's get back to the rest of the video.
Right, the next thing, a lot of newer traders watching this aren't going to like what I'm about to say, but journaling your trades. There's power in going through past performance, reviewing what went well, reviewing what didn't go well, and actually putting things in place to optimize performance more. Look through winning trades, look through losing trades. Whatever trade you take, be honest with yourself, put it in the journal. Don't start skipping trades, by the way. Don't take one on the sly and be like, I'm not going to put it in my journal, it doesn't matter. Stick it on your journal, make sure every single trade is in that journal. Be honest with yourself, because until you're honest with yourself, you're not going to improve. So be honest with yourself, track past performance. That's the only way you're going to see commonalities of things that are going well, things aren't going well. For example, you know, I came across something last year as a quick example of certain things. So trading in a pro trend environment was working out very well for me. Trading counter trend was not working so well. So just a quick basic thing that I picked up, I was like, right, you know, this is working well, this is not working so well. Let me double down on what's working well and just avoid the baggage. Let's just cut the rest, at least for now. Like now I'm in a place where I've actually picked that up again and I can do that in a more effective manner. But back then, I was like, just cut the baggage. That's what I did and improved my performance massively. So I would highly recommend just actually taking the time, being with yourself, journaling your trades, and you will see a big impact in your performance and your learning ability as well. Key thing, which I feel like a trap that most people get stuck into, myself included in the past, is what you end up doing is, whether it's a win, loss, break even, it's very easy to get into the cycle of, you know, kind of being too hard on yourself and seeing there's always going to be something to improve on. So it could be a winning trade, it could be a losing trade. Picking apart that losing trade too much and be like, there's always going to be something to improve on. There is, but there's also probabilities at hand. So you could take a perfect trade, it can have all the criteria met, all the confidences that you need, be in a picture perfect environment, and still not play out. So for you to then dissect that even more and kind of get into the nitty gritty details can do more harm than good sometimes. So you kind of have to know with experience, you know, over time of what's a good trade, what's not a good trade, which will come down to creating a trading plan and having criteria in place. But that will come at a later date once you start backtesting, journaling trades, getting familiar with the style you're trading. That will naturally come. Get into the habit of praising yourself more for the good performances, and via doing that you attract more of that as well. So if you have a good performance, give yourself credit, you know, sit back and just think, I had a good performance today. You know, it doesn't have to be in terms of result. I wouldn't even associate it with the outcome of trades, whether it's a win, a loss, or break even. Just be, I executed my plan perfectly today, I performed really well, I showed up, I kept consistent. That's a good performance. So you want to base your performance on that instead of, I took a loss today, did everything right but I took a loss, bad day. No, you can take a loss, do everything perfect, it's still a good day. Judge it on performance, not the outcome. That's important. But always praise yourself for the things that you do well, and if you do something not so well, learn the mistakes quickly, don't dwell on them, move on. The next big thing is psychology / inner work. Now I'm going to drop some words of wisdom here based on 5-6 years in the markets and managing myself, becoming the best version of myself. So, you know, let's start with, I'm just going to give you a quick taste. I don't want to go into too much detail because you are new in the markets, but I want to give you a taste of things that you may occur within your trading journey, things that a lot of people overlook, but it's so important to your development. So even in terms of like money, you know, this could be as basic or as advanced as the person. It really depends on their background and their upbringing. But you could have a belief, let's say, that money doesn't grow on trees, or money is hard to make. Like for me personally, in 2019, I had to work through a lot of this self-sabotaging beliefs, and it was mostly regarding money. So I had to really sit down, dig up the dirt essentially, really go through it, really replace it with empowering beliefs such as money is easy to make, you know, really empowering beliefs, money is abundant, all these kind of things. They may seem cliche, but actually when you really dig down to the root cause of things get a lot clearer about your beliefs around money, because that has an impact on how much you earn, how much you would give back to the markets. Like, it has a big impact. So, you know, if you have a belief that money doesn't grow on trees or money is hard to make, if you're used to earning $1,000 a month, let's say in a 9-to-5 job, and then suddenly you make $4,000 in one trade, a part of you naturally doesn't believe that that's possible, or because you haven't worked hard to do it, you may have clicked a few buttons here and there, you've obviously done your forecasting, let's say you've marked up the charts, but ultimately you haven't labored for it, you haven't really fundamentally worked hard. Like, you may have worked hard in the past, back tested all the data, etc., but because you've just literally pressed a few buttons, because it's so simple to make that money, you could self-sabotage yourself. Naturally you could believe that because you haven't worked hard for it, then you don't deserve it. So you could actually just give it back to the markets, and that could be in the form of losses, it can be in the form of different aspects, but that's an important aspect to the psychology part. But people don't do this digging, and don't get me wrong, not everyone's going to go through this stuff. People may have grown up with great beliefs about money, in which case they may not need to do this, but for myself, I had to do this, and other people may have to do this as well. Like for myself, quick example, I didn't grow up in a wealthy background, didn't necessarily grow up in a poor background either. It was more so middle class, like a normal household. Quite lucky in that aspect as well. Grew up in the UK, we were filled with a lot of blessings, and I'm super grateful for my upbringing. You know, there's certain things that I couldn't have that other kids may have. Like, I had to wait for things like, let's say other kids would have the newest stuff all the time. I didn't get that, but I'm super grateful I didn't get that, because it taught me a lot about different stuff myself. It taught me not to keep up with the Joneses, etc. Like, that taught me a lot, but that's a different video in itself. But what I'm getting at is there's different beliefs about money, about different things in life that can correlate to trading. And some people may not look at that and they'll be like, well, it doesn't really directly correlate to trading, but you can quite easily see how the dots connect. A belief about money can impact the fact that if you do make 4 or 5k on a trade, or in a month when you're previously used to earning 1 grand or 1.5, you can easily get that back to the market. So it does connect the dots, and it does intertwine with everything going into the financial markets, which is important. Another aspect to that is actually working on yourself, so self-growth, self-development. So this can be in the form of, all guys and all girls in my opinion should be going to the gym, working out regularly, or if not, doing some sort of cardio, or just really just working on yourself in an exercise format to really just develop yourself, working towards a fitness goal. That is super helpful. Just the act of going to the gym or working out regularly does a lot for your mental health. It's really good for you, both mentally and physically. So overall, you're going to get certain confidence from that. You're going to get confidence from the discipline, the consistency, the fact that your body's going to change, the fact that your mental game is going to change as well, and overall just looking after your health as well. So making sure, you know, you're not putting super bad food in your body regularly. If it is bad food, then it's once in a while, it's not all the time. Putting in good food into your body, because you've got to think of your body as a machine. If you don't have the correct input, you're not going to get the correct output. So you've got to put the right things in your body, both food and drink, and that's when you can expect greater result. And it's not always going to be directly correlated. This is indirectly, but these things have a impact on how you think, how clear you think. It's going to prevent things like brain fog a little bit more. Like, everything ties back to performance. So these things that people don't really think about, they're often important as well. There's other aspects of that as well, such as have a day or two a month where you're just kind of like relaxing, refreshing, doing something different with friends, family. Just completely forget about the markets and the charts, to just reset and then come back refreshed, ready to go get it again. And that's important as well. A little bit more advanced, you don't need that starting out, but it's something that you can think about 6 months, a year down the line, which is going to aid in that performance once again. Last but not least, stay in your own lane, especially when it comes to things like social media. It's naturally on Instagram, you see other traders and they could bag a 10% trade, a 30% trade, 40%, whatever it may be. You could see that, and as a newer trader, you're more impressionable, so you can see something like that. You may not have a style fully developed yet, you may not have the data to back it up, etc, etc. You could see that, be influenced, want to change, or even think you just missed out on a trade, and it could be completely different to how you trade. But it's very easy to see that, think you're doing something wrong, and want to implement that into your game. But the problem is, you're always going to be chasing a different thing if that's the case. There's always going to be another trader that's doing better than you, or is doing something different than you, or is using maybe a lower time frame than you to get in more tighter. Like, this is the game that we're in. Someone's always trying to top the other person, especially in courses and stuff right now. Like, there's so many, you know, what was a 5-minute entry is now a 1 minute, a 15-second, a 5-second entry. So nothing against that, but obviously everything's moving forward, and there's always going to be someone doing something better than you, or in a different way, or a more accurate way. You just got to kind of be satisfied has a negative connotation with it, but you've got to be satisfied with your own way of trading and how you perceive the markets. And you know, don't get caught up into, okay, that trader caught 10% trade, I feel like I've missed out on that trade. You haven't. That's their style. Your trade will come around. Your sequence of trades will come around. Trust your plan, trust your edge, keep taking the trades, and you've got to think of trading as a probability model. It's like a casino. You're going to get a sequence of wins to losses. You could get 3 losses in a row, followed by 2 wins, followed by 1 loss, followed by 5 wins. You don't know the sequence of losses. So just keep taking the trades as long as it's backed by data, as long as you do have an edge in the market, and consistently execute that flawlessly under pressure, and the edge will play out over time. That's the most important thing, but it's also the hardest thing to do as well. So quick words of wisdom, but hopefully you've enjoyed this video. I'll catch you all on the next one. Have a great weekend and a great week in the markets next week, and I'll see you soon.